Andrew, welcome to the show.
Thank you so much. Thanks for having me. I appreciate it.
Yeah, I appreciate you coming on, and a lot to talk about with your investing. I know some of the returns you had posted like on Twitter about your investing. You've done really well so far. I think it's always helpful though for people like, how did you get into investing in the first place? Like your first investment, Andrew. I'd love to hear
Yeah, so I gotta give you a little backstory.
that.
My background's really digital marketing. So I spent about a decade in the digital marketing world. I studied economics. I studied some psychology, human behavior. All of that stuff was really interesting to me. So that led to marketing and really digital marketing, which had a nice confluence of those kinds of different things. Had some pretty good success there, including founding and exiting an agency called Agency Within, which was one of, if not the largest independent digital marketing agency in the U.S. And then after that, I realized a few things. One, like I loved startups. Like as a startup, we were a bootstrap startup, so basically profitable from day one. So it wasn't venture backed or anything like that. But we worked with a lot of venture backed companies. I got a lot of passion, enthusiasm, excitement out of working with those companies. It's just I don't want to say more fun, but more fun, more challenging. There's like a real mission around a lot of these companies. Not to say that enterprise companies can have those missions, and fun too. But so started to spend a lot of time in that space. Met with a lot of founders, met with other investors, just trying to get to know people, know the ecosystem, and ended up that was the tail end of 2018, beginning of 2019, and then started to make investments at the beginning of 2019. I'll walk you through like the first three investments that I made because those are the ones that I kind of spent time over the first few months of 2019 getting to really know. So one was a company called Caraway. Caraway is a direct-to-consumer kitchenware company. They make amazing pots and pans. I own three sets. Don't ask me why. I bought a few sets as gifts.
Big
Everyone
supporter.
loves
Love it.
them. They also have amazing bakeware that they launched, which I'm still, I think, waiting on. I have to check with my wife what color she wants. And they have a sale right now. Go check it out. Really great Black Friday, Cyber Monday promotion through the end of the year, probably. Always be shilling, right? And so got connected to him, to the founder Jordan from a founder that I'd worked with at the agency. One of the founders, Mary Biggins of Meal Pal, had gone to the same college as Jordan. Didn't know him personally, but Jordan reached out to her. She reached out to her network. I was talking to companies, started talking to him, realized that if someone was going to win this market, it was going to be him. And so I ended up investing in them in pre-product, revenue, pre-launch. They're now just over 2 years old and absolutely crushing it. Um, Another early stage company that I invested in was a company called Branch Furniture. They're also doing really well, also just about 2 years old. I also invested, they had some revenue and some product, but they're a direct consumer and B2B furniture company. So they sell really great, I don't want to say affordable, but affordable furniture in that it's accessible price point versus like a Herman Miller, but Herman Miller quality in terms of the build and the make, the ergonomics of the chair, and everything else. And that's one where I actually saw, I don't remember exactly where, but I saw something about the company somewhere when he posted about it. And I reached out to the founder on LinkedIn and I was like, hey, I really love what you're doing. Have you thought about XYZ? Led to conversation, led to meeting the Greg, the founder, Greg Hayes, and Sid, the other founder. Met them in their showroom in New York and Chelsea, not Chelsea, and whatever that area, and ended up investing in them. They're doing really well now. And third one, Lunchbox. It's like a Shopify for restaurants. That's one where I knew about the industry because, ironically, as I was starting the agency with my co-founder, we also were starting a company in the space around technology for restaurants where we put tablets on tables in bars, restaurants, and nightclubs to view menu, order, check out on demand. I still remember the script, perfectly. Ended up talking to a company, actually the founder of Tattle, who's announcing around now too. Ended up passing on that company, just wasn't in my scope, but he introduced me to the founder of Lunchbox, to Nabil. Ended up investing early, also ended up advising, and they've had tremendous success, and they're raising Series B right now, which will probably be closed by the time this gets launched. I hope.
I've heard a lot about I've heard a
in
lot
terms
about them.
of confidentiality.
Yeah, of course. No, yeah, I've heard a lot about them in terms of Lunchbox and Nabil and what they've done. I've kind of followed along the last couple of years. I don't remember where I kind of first saw them, but I remember seeing them like I've been seeing the progression of him over time. And I want to go back to the first investment you mentioned. So with that company, you said you just knew the founder was going to crush it. Take me through more of that, more aspects of that, because we're all kind of looking for those founders, right? It's like what are some aspects of him?
Before I do that, I also just wanted to mention, like, I specifically talk about those three, not just because they were my first, but like, especially as getting into angel investing, like, great founders you can meet from anywhere, and like, you want to spread your surface area, right? One was cold outreach. I read about it, and I think probably like an industry newsletter or something. One
Yep.
was another founder that I didn't know, another founder that I got connected to from an investor, ended up being the one that introduced me, and another one was, you know, was from my loose, warm network, not like a friend, not someone that I really talk to that much, but like really like you got to spread, be wide on that top of funnel and then like narrow. Yeah. Um, Great question on the founders. So I can give you the example with like Caraway, but again, like it really just goes back to like if you could find great founders building in large markets, they're going to figure it out and they're going to have these outsized outcomes and asymmetric upside. Um, with him, like I'd seen some of the other direct consumer kitchenware brands. Some, were doing well. Some continued to do really well. I had like just kind of looked at them. I hadn't necessarily seen any decks or anything, but I I talked to other founders in the direct consumer space, and then when I was talking to Jordan, normally you get like a surface level overview, even in the first meeting, even the second meeting, like of how they're going to go to market, how they're going to approach certain things. His level of detail and planning was like way beyond, and it wasn't like everyone has a plan until they're punched in the mouth, but like it was like research and he done work actually, not just like let me just copy and paste someone else's or to use influencers. It was like we're gonna go after influencers. This is our strategy on influencers. These are the influencers we're gonna target, and this is why. These are the keywords that we're gonna target. This is how we're gonna think about Facebook and Instagram. This is this is what we think our CAC is gonna be and our LTV is gonna be. Everyone has that, great, but like this is how we think it progresses over time. This is how we think about margin expansion. This is how we think about product expansion and when we're going to release these products. And like, we're already talking to the manufacturers and designers and the factories about these products, not manufacturers, the factories about these products and this next product and everything else. Talked about like working capital needs and things like that. Things that like, even to today, when I speak to direct consumer companies, are not the things that pre-seed founders think about, not even seed or A founders. It's like in between A and B is when you start to hear D2C founders start to really like grok working capital and think about it in a more, in a bigger way. So like if you could find founders who are thinking, 2-3 rounds ahead, like there's probably something really special there.
And with your background, Andrew, so obviously having run an agency, worked with some number of massive brands and just all sorts of different companies, you have that expertise you bring to the table in terms of talking with these founders. Are there things you're looking for when they talk to you about this level of detail with their company, or they're too broad about whatever they're talking about? Like, because from your experience a lot of different things around what works and what doesn't work from different examples. Take me through how you think through that when a company pitches you or talks to you.
Yeah. I think like it's funny you pick up on something that not a lot of people pick up on until I like call it out. But like the agency, like the digital marketing expertise and stuff that I can bring to the table is great. But I also work with a lot of early stage teams and got to see almost like a venture, like a fund in that I worked with a
Yeah.
lot of companies. Some went really well and grew really well and were really successful clients for us. Some less so, and you got to work with a lot of different early stage founding teams. So kind of have a few hundred reps there now, which has been kind of like instead of just starting, got me that background. Um, yeah, I think I probably over-index on like wanting to understand go to market just because that's my background. I want to understand LTV to CAC. And I don't say that there is no wrong answer because there are wrong answers, but it's not about like wrong answers or right answers. It's about like how much time, attention have you thought about this part of the business, and like and if not a lot, that's okay. If hey, like we're pre-product, like we're still figuring out exactly what the product is. We've thought a little bit about different things. have you thought about like who are you going to hire into that position to think about those things? How are you going to, do you have, do you have a network where you're going to fill these roles, or like, what is the type of person that you want? Yeah, like we're going to be really B2B focused or D2C focused, or everything we're going to do is really driven through partnerships. So we need someone with a really strong partnerships background. Um, there are wrong answers. I've gotten the, somewhat recently saw like, hey, we're going to spend, $10,000 and our CAC is going to be like $3. It's just like, that's just not like, sure, cool. Like, unless you're giving away free money, and even if you're giving away free money, like it's probably hard to get a $3 CAC these days.
Yeah.
So, it just shows a lack of understanding in the market. I would say like one other thing that I found to be, I don't know if funny is the right word, but like interesting is now that I've kind of been around the block a little bit, I'm starting to like see companies where I see them like early in their fundraising cycle, and I take no, like very little or no credit. Like I give them a little bit of feedback. Maybe they internalize some feedback, and you see them like go and raise, or like someone else will do their deck 3-4 months later, and it's like, oh, this is like a real idea now. Like you kind of like. So it's funny that like there's a whole chunk of timing in, especially in pre-seed, like where like if you see someone who's been thinking about the idea for 2 months, the deck's very raw and very new, versus someone who's battle tested it even 4 months later, has been thinking about the idea for 6 months, has gotten tons, maybe 30, 40 people giving them feedback and battle testing it a little bit, where it can become like much, much stronger. And like, that's obviously a great sign. And there was one the other day, like, where I like was like, wait, this is the same company. I had to go back and check the deck. They were a direct to consumer company. They were building this space, and like I was like, I don't think the market's necessarily big enough for a venture scale exit. And I don't think I was the thing that pushed them to this. And now I see them 3 months later, and they're literally raising as a D2C hold company. Like one of those roll up strategies. And I'm like, maybe I pushed them a little bit that way. It's just interesting to see. Like that, if they had pitched me that strategy with that team that early, like might have been interesting. I don't know that if it's a fit for me right now. It's a little later stage, but like it's kind of interesting to see that just like these companies evolve over time and over rounds and grow. But like even early on, like there's iteration.
For you, with that experience again, like how hands-on are you as an investor? I'm sure it's different per company potentially, but how do you think through that at least? Because some people I've talked to before, I mean, they're completely hands-off. They just want to invest. They might do rolling funds, whatever, in terms of investing into that, or funds themselves, or not really doing direct cap table investment. Some people are hands-on. They know they have expertise in certain domains. For you, what does it look like, Andrew?
Yeah, I am. The way I think about it is like I've been thinking a lot about it because as a solo GP, it's one of the things that's challenging as someone who wants to be hands on, and that's part of the sell to founders, getting onto cap tables. It's one of the things about building a brand and reputation in the space that I want to do and want to be proud of. Is how does that scale over time, right? So right now, as I've transitioned to a fund, I still obviously have an angel portfolio that I talk to the companies, help the companies. There's no expectations. I've one small advisory agreement that's expiring at the end of the year. So after that, I'm, again, expectations are set and fair with the angel portfolio companies. I still am going to want to help them, A, because I have money in them, and B, because they're great founders, and I want them to continue to grow. But it's transitioned to more reactive versus proactive, right? And so as opposed to on the fund side, it's much more proactive. It's much more of right now I've made 2 investments out of the fund already, have regular bi-weekly, every 2 week calls scheduled with the founding team. And then, early on, right after the investment, there's a lot more communication, email, calls, text, especially as they're wrapping up the round, trying to think through who else they want in the round and what the syndicate looks like. There's, a lot more constant communication. And then over time, it ebbs and flows, right? Hey, like we're heads down working on the product. Like, cool. Like I'm here. We've talked about the product roadmap. I'm not an engineer. Like you probably, we might skip one of those calls, right? And might go down to once a month. Oh, okay, product's ready. We're starting to gear up for go to market. Let's talk more. Let's talk, again every 2 weeks, maybe even more often. I spoke to one of the companies I invested in, helped with the kind of interview process um, on their go to market marketing coordinator director. I don't know what the title is, but helped interview that person. And now that he's starting either this week, next week, something like that, I'll probably have a monthly call with him as well, just to check in, talk through, how the month's going, strategy, what new channels we're testing, creative, all those things. I'm thinking about expanding to this, thinking about bringing on an agency, thinking about hiring people, all those things, over time, that grows. And then maybe he hires someone, maybe he expands an agency. And then again, ebbs and flows, probably needs less of my time and attention on a more regular basis and becomes a little bit more reactive. And so that's kind of how I think about it. I'm not going to run the day to day marketing for these companies, but I am going to help them think through strategy, approach, LTV to CAC, planning, hiring agencies, hiring individuals onto the team.
Nowadays, Andrew, I know you mentioned in I think some interview I read about or listened to around, you love being early into startups and finding them when they're early, and that's what kind of excites you. And finding before it's like a hot deal, you want to find something earlier than that. What does that look like now for you? Because you've done the angel investing as well. Now you have a rolling fund. How does it look like in terms of you kind of trying to find these companies super early?
Yeah, so when I was doing the rolling fund, I got some. I specifically put in a mandate around the fund cap in terms of what I can invest in. So I can't invest in companies that are $15 million pre-money is the cap in terms of companies that I can invest in. I can always go to LPs for exceptions. You know, if and when if there really are ones that warrant it. But right now, like I put that in place because I want to remain diligent, and I want to continue to have that approach that's worked well for me before, and hopefully will continue to, of like really investing in companies in their early stages. I think that's the opportunity where a few things happen, right? You invest in the deal, quote unquote, before it's hot, where the valuation is fair and a little bit more aligned. Um, Listen, founders should get what's market. That's their job. They should go
Yeah.
out and raise it whatever they can. Like I'm a strong believer in that. And where I also think like you know my my network's grown over time. I'm starting to see more things from founders, more things from other people, and things like that. But a lot of my network is a lot of the companies that I see are first time founders. Maybe they have experience in an industry, but it's not their they don't have three exits under their belt. They haven't raised tens, hundreds of millions of dollars before. So it really also excites me to like be able to help them on their journey a little bit, whether or not I end up investing. Right? I think that if you don't if you don't enjoy the game, you won't be good at it. And like part of the game is not just the investments that you make; it's the people that you interact with along the way. And this industry is very my grandfather used to say the world is short, meaning like you run into the same people again and again, and like
Yeah.
you totally do, especially in venture. And so like a lot of that comes back in great ways. But even not, it's just great. Like when I don't know what happened from it, but I saw a company, really liked it, wasn't a space I didn't really know, so wasn't a fit for me, but made two good introductions from that. Like those are things where now those founders top of mind. I'm going to be top of mind for them when they think about who should I introduce, other founders to. Those investors are going to share deal flow. Like those things are really exciting to me to be able to, again, like when they're early and they are not quite as networked as they might be later on,
Yeah.
or they haven't exited and haven't built that network for themselves to help a little bit along the way. And I've had plenty of people have kind of done that for me along the way, and I'm more than happy to pay back some of that as much as I can.
Yeah, I think the longer you're in this industry, you realize that more and more, just how those relationships build over time. Even like listening to, I probably listened to like 5 or 6 Chris Sacca interviews, and him just talking about how people he went deep with in terms of relationships that then paid off, in the long run to have, one of the most successful funds, obviously, in terms of him being a VC. And for you, going from angel investing to having a fund, and you deciding to go the rolling fund versus a traditional fund, take me through some of that. You could have just kept angel investing in theory. You want to leverage it up. Like, how did you think through that decision?
Yeah, so I kind of always knew I wanted to do a fund. So when I was angel investing, I always kind of did it with a fund lens and perspective in terms of risk reward profile, upside, and looking for things with really like asymmetric upside versus sometimes you see deals that probably the profile is a little bit more PE than it necessarily is VC.
Yeah.
Um, and then, as I was transitioning to investing out of a fund, I looked at traditional fund model, I looked at the AngelList rolling fund model, and I just realized how great the AngelList rolling fund model was for emerging managers, just in terms of being able to meet people along the way and grow that kind of capital, those capital relationships and that capital stack over time. Is hey, like I can have a conversation, hopefully this gets a couple 100 million listens and then the LPs come pouring in. But if I had a regular fund, I might have closed it already and would have been like, let's keep the relationship going and let's see. Now it's like, oh, okay, let's keep the relationship going. You don't have to make a decision today, but like there are investment opportunities that are pertinent and available at the moment. Um, and so that's why I ended up going with the AngelList Rolling Fund. I don't know, personally, I don't know that I probably won't stay with the AngelList Rolling Fund platform forever. I'll probably transition to more traditional fund model after
Yeah.
about 2 years. 8 quarters is kind of the goal. Um, it's not set in stone, but that's the plan for right now.
With that in mind, Andrew, so in terms of your fund, people can look at, go on AngelList, they can find your fund, of course, your rolling fund, but how'd you have the structure of that? I've seen, there's lots of different ways, minimums people have for that, how they set it up and everything. Just I'm just curious in the kind of the backstory between, how you came up with yours, logistics around your fund.
I kind of, started from the end of like, what do I want this fund to be? Like, how much do I think right? And like the other option was along the way was like doing more SPVs, right?
Yep.
And like I had right before I launched the fund, I had like two companies where I invested as an angel in their pre-seed seedish rounds. One was a seed plus round, where I had a couple $100,000 kind of follow on to my investment based
Yeah.
on my diligence and not just the intro, but really from my diligence and knowing the founder. And so like that to me was a little bit of a signal of okay, it's time to ready to transition. Like people are trusting you, even though they're not paying you for that trust at the moment, which again is fine. Um, they're trusting your judgment and they're trusting you with their dollars. And so then I worked kind of from the end of like, okay, like if I'm going to do this, should I do SPVs? What would that look like? Okay, instead of investing 10 to 25K checks, 50K checks, maybe I'll do 100 to 250 and do them one at a time. Do SPVs and try to do this many deals per and like then I was like, okay, like maybe I'll do a traditional fund model. What would that look like? How much do I think I could deploy into these companies? Um, I wouldn't say responsibly, but responsibly plus um, get allocations and also,
Yeah.
again, get great returns for LPs. And so based on that, kind of said, all right, I want this to be, basically like around the $5 to $10 million fund, which even that is a wide swath. And based on that, I was like, okay, I want to get to X couple $100,000 by the end of Q1, a little bit more than Q2, $1 million by Q3, and right now I'm pretty on track for that. A little bit ahead of schedule, knock on wood. But yeah, exactly. Um, we'll see. But it's I felt this is an amount where I feel comfortable um, take other people's money because once you're managing OPM, it's a whole other ball game, and there's a lot of trust. And I said this in one of my LP updates. I do not take it lightly that people are trusting me with their capital. Right, it's totally different when I'm putting in angel checks saying, "Hey, talk to the
Yeah.
founder. I invested. I put my money on the line, but it's up to you to invest or not." Right? They can
Yeah.
pass. They can not. They can do their own diligence. Now they're literally paying me to manage their money, and like it's a huge responsibility. Yeah, I wanted to make sure that I felt comfortable in the dollar amount. And, kind of be able to still again generate great returns. I want to be. I'm stealing this line from a good friend, colleague Katie Shea of Divergent VC. I want to be in the. No, I don't want to be in the AUM game. I want to be in the returns game. I will probably always again. Who knows what the way C rounds are going? Maybe I'll need a $250 million pre-seed fund. But I always kind of see sticking this sub. The next fund, again, this fund focused on this fund, you get a good return. The idea of the next fund would be 15 to 25 million. I don't see wanting to raise $100 million fund. Like, I don't know that I have the deal flow, deal quality, structure. I don't know that the returns are there to do that. And like, I want to be consistently generating great, top quartile returns, top decile returns for LPs. Like that's my goal. That would be my
Yeah.
goal.
No, I appreciate you sharing all that. I know we're out of time, but Andrew, what's the best place for people to get in touch with you, learn more about all you're doing as well?
Yeah, sure. You can always email me, Andrew at irrvrnt.io, IrrvrntVC.io. If you're submitting a deal, best to do it via my website, irrvrnt.io or irrvrnt.com. There's a form to fill with some pretty basic information, upload a deck, upload a docs link. And you can also follow me on Twitter. I just crossed 5,000 followers, so now I'm a Twitter influencer.
Let's go.
So tips soon, verification tips, all of that. Hopefully coming soon. But at IrrvrntVC, IrrvrntVC.
Perfect. And we'll be sure to link that all up as well. The VitalizePodcast.com. We'll have your episode there. Andrew, thank you so much for the time today. Appreciate it.
Thanks, Justin. Appreciate it.